Following the 2018 federal budget announcement, we're highlighting some of the most important changes and what they could mean for you. Pre-election budgets often put forward tax relief, and this one was no different. In this update, we'll discuss some measures that will give Australians entering retirement more flexibility. We'll also discuss changes to personal tax that could mean more money in your pocket, and a boost in aged care funding. These changes haven't passed the Parliament and are not yet policy, so we'll continue to keep you updated as budget proposals become law. If you're retired or about to retire, there are some important changes on the way. Changes to the work test will give you more time after stopping work to top up your super with voluntary contributions, which is a contribution on top of what your employer must pay into your super. So how does it work? Currently, if you're between 65 and 74, you'll need to meet a work test in the financial year you make the voluntary contribution. Under the new proposal, if you have a total super balance of below $300,000, you'll have an extra year from when you last met the work test to make a contribution. This is subject to existing contribution rules. Another proposed change is an increase to the pension work bonus scheme threshold. If you'd like to continue working part-time in retirement, this is good news. It means you'll be able to earn up to $300 in a fortnight before your age pension entitlement is affected. This is an increase of $50 on the current threshold of $250. This proposal offers older Australians more incentive to work part-time in retirement to boost their income and stay connected in the community. Proposed tax changes to be rolled out over the next 7 years could mean some working Australians pay less tax. Low to middle income earners will be the first to benefit and will receive up to $530 as a tax rebate from the 1st of July 2018. This rebate will be paid after submitting a tax return. Minor updates to tax brackets will also begin from the 1st of July 2018, but the majority of changes proposed will take effect down the track from 2022 to 2024. The government proposes to raise the thresholds for most tax brackets and remove the 37% tax bracket completely from the 1st of July 2024. According to the government, this will mean that around 94% of taxpayers will have a marginal tax rate of 32.5% or less in 2024 to 2025. Current and future governments are making aged care a priority, but having your own plans could give you more options, whether you hope to stay in your own home or choose residential aged care. The budget offers an additional $1.6 billion to provide 14,000 extra home care packages. These funds could ease the current and the growing demand of ageing Australians wanting access to care in their own homes. So, you've heard about some important changes on the way, and we'll continue keeping you informed as to when and if these changes become law. For example, the downsizers measure we discussed last year is now law and will take effect from the 1st of July this year, giving people aged 65 and over the option to make a super contribution of up to $300,000 from the sale of their home. It's always a good idea to seek financial advice if you're unsure how any of these changes might affect you. You can find out more on the StatePlus website or get in touch with any questions you might have.